Good morning. It's Wednesday, the 13th of March, and this is Govindraj Ethiraj broadcasting from Mumbai, India's financial capital. Our top stories and themes for the day on a packed show. Markets are weak in the middle as they grapple with regulatory overhang on small caps. Inflation eases off in February. The outlook is steady. The interesting contrast between vegetarian and non-vegetarian food. Car sales hit a record high in February as manufacturers push numbers. The Organization of Petroleum Exporting Countries sticks to its growth forecast for oil demand.
This is a core report with Govindraj Ethiraj.
The markets are weak under scrutiny. The stock markets were steady, leaning on the positive side on Tuesday's trade. The broader indices hid more than they revealed about the market as a whole, and I'll come to that in a moment. The BSE Sensex touched a high of 74,004 before settling with a gain of 165 points at 73,668, and the Nifty 50 ended 3 points higher only at 22,336. So what was hidden? Well, the BSE Small and Medium Enterprises IPO index fell nearly 5% in the day after the Securities and Exchange Board of India said it had observed signs of manipulation at both the trading and issuance levels in the small and mid-size enterprise space. Now, there is definitely far more scrutiny in this space now of buyers, sellers, and the brokers in between. Meanwhile, markets were waiting for US inflation data that showed an increase of 0.4% for February and 3.2% over the year. Now, CNBC says that this was in line with economists' monthly forecast, but higher than the 3.1% they expected for the annual figure, according to the Dow Jones consensus. US stocks had opened up on Tuesday morning with the Dow Jones up as well as the Nasdaq. Higher inflation, of course, means that interest rates could stay higher for longer. Reuters earlier said that while investors anticipated at least 3 interest rate cuts by the Federal Reserve this year, most likely starting in June, a stronger than expected inflation number could shake market sentiment across the globe. The markets are weak in the middle. Mid and small cap stocks, which is what I mean when I say the middle, are seeing a fair bit of selling. The BSE Mid Cap Index fell 1.3%, while the Small Cap Index fell 2.1%. The BSE SME IPO Index, as I referred to earlier, actually extended Monday's losses and fell more than 5% in trade on Tuesday, as we just talked about. The Mint newspaper says as much as 41 SME stocks witnessed a double-digit fall of up to 20%. Some of them had just listed weeks ago, had received a good response for their IPOs, and had listed at a premium. A sudden fall, which seems to be across the sector rather than a stock specific, doesn't obviously augur well for the research, if any, was done when these stocks were bought. SEBI has said that it may consider implementing disclosures as a starting step with respect to SME IPOs. In the last 1 year, the BSE SME IPO index, just to return to that, has more than doubled in value, obviously outperforming the Sensex by a significant margin. Inflation eases off in February. India's consumer price-based inflation has eased a little to 5.09% in February, and this had followed to 5.1% in Jan, and it used to be 5.7% in December. The recent numbers mean the target inflation continues to stay within the Reserve Bank's tolerance level of 2 to 6% for 6 consecutive months now. Bank of Baroda Research said that the 5.1% figure is exactly what they had forecast, as had some other economists and consensus estimates as well. Bank of Baroda Research also said that inflation is purely a food inflation-driven phenomenon, which will continue to pressurize inflation in the coming months. Vegetable inflation is the highest at 30%, and with onion prices going up again, it will continue to exhibit such tendencies, a note from the bank said. Like before, edible oils and fats have brought down inflation to an extent with negative growth of almost 19%. All core inflation groups, and we'll come to an explanation of that shortly, have witnessed low inflation of less than average. On the other hand, many consumer product companies have announced increases in prices that could, of course, be reflected in inflation numbers down the line. The overall numbers, rural inflation is higher at 5.3%, urban is at about 4.8%, and all of this is because of the higher weightage of food products in the index. Inflation also varies, by the way, across states of India. Separately, the index of industrial production growth for January came in at 3.8%. Mining and manufacturing did better, and 8 of the 23 sectors had negative growth rates and included food, garments, paper, coke, chemicals, electronics, and others. The major boost in the IIP, that is, came from the auto segment and furniture. I reached out to Madhavi Arora, lead economist at Mumbai-based Emkay Global Financial Services, and I began by asking her what stood out to her in the latest numbers, and finally, whether she was seeing any triangulation with other data points in the economy, including on consumption.
So basically, if you look at the inflation trends, so especially in the winter season, vegetable inflation on a sequential basis has come off. That is generally a seasonal behavior of vegetables that during winters they tend to get cheaper. But the sequential contraction that you've seen in vegetable has been much lower than what historically you've seen over the last 7-8 years. So there's been an intrinsic upside to vegetables in this particular season, and which obviously is reflecting in the fact that this time around also we were expecting a tad lower inflation, which was sort of led by much higher contraction in vegetables. But what we saw this month is vegetables were largely flat. So, in fact, the vegetables which are basically a smaller weight in the CPI category, like cabbage, for example, seen a massive increase, even though tomato, potatoes have actually been sort of moderated. So I think this category has been the most notorious one in the food segment also. But at the same time, certain protein goods also have been very patchy, like generally meat and fish tend to be much lower at this point in time, but they're actually sequentially much higher than their historical standards. So, there's a lot of patchiness within the protein goods as well as vegetables. But that at the same time, if you look at the core inflation, that has that momentum, or the sequential increase in core inflation has been steadily sort of been moderate. And on a year-on-year basis also, now your core inflation is actually an all-time low number, right? So it's comfortably below 4%, again sort of reflecting the fact that the intrinsic demand in the economy is actually much lower.
So, what is that telling you? The patchiness and the sequential rise that you're saying is unusual compared to previous years?
No, basically, I would see you also had a relatively difficult Kharif season compared to last time, which also added some bit of a noise in cereals and stuff. And vegetables, again, there've been some production disruption, which are reflecting the fact that as we go ahead into probably coming years, owing to weather vagaries, you're going to be sort of seeing a much higher global food inflation in general. And domestically, we are already seeing signs of that.
Right. And you talked about core inflation being quite low. So, two questions, very quick ones. One is, could you explain what core inflation generally means to those who may not know? And secondly, why is it low and would it stay that way?
So core inflation basically is inflation excluding all the noisy components, which is excluding food and fuel. Both components are relatively more noisy. And core is basically the residual inflation, and in larger context is mostly services inflation, because it has a very small goods component in it. To some extent, it basically shows your intrinsic demand, right? Which is over and above your food demand. But in India, of course, food is a very important component given that we're a developing economy. Food is more than 40%. Food and beverages is more than 40% of a consumer basket. But the rest is basically your non-food inflation, of which part is energy inflation. And the remainder is basically around 37-38% is basically your core inflation. And it's generally is a non-noisy or a more structural inflation, so one can say, and basically reflects the, as I said, the intrinsic structural demand in the economy.
And how are you looking at, or how are you seeing the next few months overall, that is?
So I think for the year as a whole, FY24, we're looking at consumer inflation, averaging close to 5.4%, which is in comparison to around 6.7% that we saw in FY23. So there's been a moderation in inflation on an average. And in the coming year also, I think we will be seeing that moderation continue, and mostly your inflation will be close to 5% next year on an average. And there will also be periods where inflation would actually come down to sub 4%, which is lower than RBI's target range. But overall, I think the inflation trajectory seems to be comfortable, except for some patchy months where vegetable inflation could get a little nasty. But that has been the case in the past as well. But as what we see in vegetable inflation is that, though it tends to be very volatile and goes up very fast, it also comes off very fast as well. So on an average, it's sort of smoothened out. But those periods of volatility are very noisy.
Right. And last question, Madhvi. So, do you see any of these figures either triangulating or diverging from other data points that you're seeing on the economy? I'm talking about more at the consumption level and so on.
Not really. As I said, if you look at the intrinsic demand of consumers, if you look at the consumption pattern in India as well, in the growth picture or overall, what you're seeing is that consumption is all diverging from investment. And investment has been doing very well compared to consumption, which is also led by government to a large extent. So I think to that, if I look at with those lens, I think you can sort of derive that, consumption demand in India has not necessarily been very solid. Though growth has been comfortable back home owing to various factors, but consumption has been, largely a urban-led story, and even urban also is now seeing a slower consumption growth, which is now reflecting in a lower inflation also to some extent, especially lower services.
Right. Madhvi, thank you so much for joining me.
Okay, thank you.
The great face off between vegetarians and non vegetarians. Well, this is not about food as it may have sounded, but as we just discussed, vegetable inflation is now running at 30%. That is high by any standards and also something that cannot be controlled by steps like curtailing exports or other supply management moves. CRISIL Research puts out a monthly Thali report where it looks at the food constituents of a classic Indian meal. In its latest version, it has said that the cost of the representative home-cooked veg thali rose 7% in February, while that of the non-vegetarian thali declined 9%. The cost of the vegetarian thali in turn increased because of an increase of 29% in the prices of onions and a 38% increase in the prices of tomatoes. Prices of rice, which represents 12% of the thali cost, and pulses, which represent 9%, also increased by anywhere between 14 and 20%. So all in all, prices are rising across the board. On the other hand, if you are a non-vegetarian, you have some reason to feel good. Prices of non-vegetarian thalis are down 20% thanks to a decline in broiler prices, albeit on a higher base last year. You may recall us talking to folks from the broilers associations a few weeks ago precisely on this, asking why prices were coming down. Now, seen over the last month, the cost of a vegetarian thali decreased slightly and the cost of a non-vegetarian thali rose slightly because of a slight fall in prices of onions and potatoes. Now, this is comparing month on month, whereas the figures I gave you earlier for year on year. As many of our economist friends keep telling us, including a little while ago, food prices can be highly volatile in India and both ways. I reached out to Pushan Sharma, director at CRISIL Research, and I asked him to delve into the underlying constituents of price movements and also whether moves to control them were working.
Clearly, onion and tomato have been, causing a lot of volatility amidst the elements that we track within the thali. If we look at onion, the prices have shot up, and that's because of rainfall that we saw during November in key states like Maharashtra and Karnataka. Also, if we look at the Rabi season, the harvesting for which is going on right now, and interestingly, the Rabi season produces about 65% of the overall onion production in India. And there we have seen a decline in the sowing. The sown area has substantially reduced. So the onion prices are expected to remain firm. On the other hand, tomato, the prices peaked at around 100, 110 rupees last year around July, August. There, the prices, while they have moderated, but because of the low base of last year, we're still seeing that the tomato prices are about 38% higher. But unlike onion, we're expecting that the tomato prices could moderate as we go ahead because this sown area under the Rabi season for tomato has been substantially higher.
Got it. And if you were to look at, again, I don't know, maybe then we need to expand the sample set a little wider and look at more than 1 year. But if you look at many of the moves that were made by the government to control prices, either mostly by stopping exports, at least actually for both cases, what has that impact been?
If we look at the major interventions made by the government, they've been for commodities like wheat, rice, and onion. All of these have seen curb on exports. Despite that, we see that the prices for wheat and rice have inched up. And the reason for that is that the stocks with the government, with FCI, are significantly lower as compared to last year. Weather has also played a critical role where we've seen production of these commodities come down. And that's one of the reasons why we see that the prices are still higher. Had those moves not been made by the government, we could have seen that the prices would have escalated even further than the levels that we see right now. Given that, in case of rice, India was the largest exporter of rice with 40% of global trade being contributed by Indian exports. Now, if we look ahead, the wheat sowing is just likely to happen now. And we're expecting a good production, robust production of wheat this year, almost to the levels of the all-time high. And we exported, when we produced about 114 million metric ton of wheat a couple of years ago, the exports that year were about 6 to 7 million metric ton. And that is not likely to happen this year, given the export curve. So we are going to have a surplus. And that is something that will bring down the wheat prices or moderate the prices to some extent. Rice, on the other hand, has seen a significant up move in prices, and the production in the Kharif season has also not been very strong. And as a result of that, we're seeing that the rice prices could sustain, although they could come down slightly because of the Rabi harvest, but still on a year-on-year basis, they could be higher.
And how are you seeing the price movements and correlation with feed for the non-vegetarian side? Here on the core report, we've also been talking to members of the broiler industry, for example, to understand why prices are down as opposed to going up elsewhere. And it's quite interesting as to why that's happening. And that's, of course, keeping overall food inflation down as well. But what are you seeing?
So that's where, a lot of interesting insights emerge. If you look at the non-veg food plate versus the veg food plate, there's a divergence in trend. The veg food plate has been inching up YOY, while the non-veg food plate has been coming down. And the reason for that is the broiler segment. And broilers account for about 50% of the non-veg food plate. Now, the reason why broiler prices have been going down, they were about 273 rupees per kg this time around last year. They are close to about 200, 220 levels right now. And that's because the supply has exceeded the demand. And if we think deeper into that, what we see is that the energy prices have a strong correlation with the edible oil price. Crude oil has a good linkage with it. Now, edible oil prices are a significant contributor on the soy meal prices, right? So with lower edible oil prices, soy meal prices have been better for the poultry segment. And that has led to good supply for the poultry segment in terms of animal feed. So the average bird weight has actually increased. And that is what is leading to higher supply in the market. But the demand has not kept pace with that. So because of this excess supply, lower demand, broiler prices have been inching down. And we see that being at similar levels in the coming months as well. And that's what is causing this divergence between the veg food plate and the non-veg.
So how are the trends month on month? We've been talking year on year and last month to this month. And how is it looking for the immediate coming months?
So if we look at month on month, some of the commodities that we spoke about, like onion, which had inched up about 30% YOY, on a month on month level, they are about 14% lower. In case of tomato, the trend is flat, as well as in the case of pulses. But what is also providing relief on a month-on-month basis is the fuel prices. And that will actually get pronounced as we go ahead, since the Prime Minister has announced a cut in the LPG prices by 100 rupees. And that has more than 10% weight in both the thalis. So that, again, is going to bring down the thali prices. But on a month-on-month level, onion is one of the commodities that is bringing prices down.
Very sort of early question, but anything that you're looking out for from a monsoon perspective that can change things, because we are only about 3 or 4 months away?
Right. So monsoon really plays a very critical role, as we all know, in agriculture. And that's because only about 55% of our area is under irrigation. So almost half of our land depends on how the monsoon progresses. And not just how the overall monsoon progresses, but during the critical months of sowing and harvest. Like last year, we saw unseasonal rainfall during November that disrupted the production of onion. So it's not just the overall monsoon from June to September, how that is, but it needs to rain when there is requirement for rain. And that is what remains to be monitored. As of now, we're seeing that the signals are for a normal monsoon, but we'll get more clarity on this around mid-April.
Pushan, thank you so much for joining me.
Thanks a lot, Govind.
Gold slips down. Gold prices, of which we've been discussing in some detail in recent times and days, have been hitting record highs, as we've told you, and have now eased off a little bit. But that's after some 9 sessions of continuous gains. Spot gold fell 0.5% to about $2,171 per ounce on Tuesday, and is just below the record high of $2,194.99, almost $2,195 per ounce hit on Friday. Indian prices are largely tracking these international prices. OPEC sticks to growth forecast. The Organization of Petroleum Exporting Countries has stuck to its forecast for relatively strong growth in global oil demand in 2024 and 2025, and further raised its economic growth forecast for this year amidst falling inflation and anticipated rate cuts, both Reuters and the Wall Street Journal reported. The OPEC raised its global economic growth forecast for this year to 2.8% from 2.7%, supported by strong growth dynamics in China, India, and the United States. OPEC's 2024 demand growth forecast is far above that of many other forecasters, including the International Energy Agency, Reuters said. Now, OPEC believes oil use will keep rising for the next decades, while the IEA predicts that it will peak by 2030 as the world shifts to cleaner energy. OPEC, of course, reflects the statements and views of oil-producing countries, and their optimism obviously must be viewed in that context. In the report, OPEC said that a robust dynamic for economic growth towards the end of 2023 was expected to extend into the first half of 2024, and it raised its 2024 economic growth forecast by 0.1 percentage points. Now, if you've, of course, been following the India GDP numbers, they're largely in sync with these global numbers. The India higher numbers obviously contributing to the marginal increase in the global outlook for OPEC. So OPEC did say that the 24-25 growth trajectories for India, China, as well as the United States could exceed current expectations. India's oil exports avoid the Red Sea. Most tankers carrying refined fuel from Reliance's refining complex in Jamnagar in Gujarat are now sailing via the Cape of Good Hope to avoid the Red Sea. Reuters is reporting, quoting both shipping sources and tracking data. Reliance, in its chartering contracts, is offering tankers the flexibility to go either way, according to shipping sources, but added that most tankers are opting for the African route, which is obviously the long one. At least 8 tankers since mid-February have taken the Cape of Good Hope route to supply jet fuel and diesel to Europe, said Reuters. Previously, all tankers carrying fuel from Reliance Industries passed through the Red Sea. Reliance's 2 refineries at Jamnagar in Gujarat can process about 1.4 million barrels of oil per day. Manufacturers report record auto sales for February. We earlier reported auto sales numbers from dealerships which come out a few days before the manufacturers. It's all strong, of course, except that dealers are complaining of high inventories. Not surprisingly, there is a slight difference between the two sets of numbers, with the Dealers Federation reporting a 12% growth in sales of cars, while the industry is reporting a roughly 11% increase in car sales, also the highest ever February domestic sales of 371,000 units roughly. The industry body also said that two-wheelers and three-wheelers also witnessed higher sales in February this year as compared to last year. Sales of two-wheelers were up about 35% as compared to last year. Industry data also revealed that exports of total passenger vehicles rose about 20% in February as compared to last year. Jet, will it or won't it? In a step that could finally lead to early resumption of flight operations at the grounded Jet Airways, the National Company Law Appellate Tribunal, or the NCLAT, on March 12th upheld the transfer of ownership of the grounded airline to a consortium called the Jalan Kalrock Consortium, according to Money Control. The NCLT has already permitted the transfer of ownership to JKC, which is the name of that consortium, back in January last year. The appellate tribunal further directed the lenders to effect the transfer in 90 days while asking JKC to obtain an air operator certificate within this window. Jet Airways was grounded in 2019, and the State Bank of India, its largest lender, initiated insolvency proceedings against the company before the NCLT in Mumbai, and the company was subsequently admitted to the resolution process. Jet Airways started operations in 1993 and did well for a while till it ran into financial problems. That was the core report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.